It's a design flaw, building a huge part of the world's oil and gas infrastructure around a single exit at the Strait of Hormuz, a mere 33 kilometres wide at its narrowest point. Just as a tiny port in the movie Star Wars was the only way to take down the massive Death Star spaceship, the narrow strait is a critical vulnerability for the global oil and gas market. The International Energy Agency has been saying for years that the world needed to diversify its energy choke points. Surprise, surprise, it didn't. But what if you could redesign it? Will the lessons learned from the Iran war encourage producers to diversify away from Hormuz, build alternative transport routes, reroute oil routes through Asia or other countries? Will it rekindle the debate about renewables and nuclear energy? What does the post-Hormuz Gulf export architecture look like? Let's take a look. Hormuz has been a risk for about as long as it's been a trading channel. Tensions go back centuries. After Iran nationalised its oil industry, Britain's Royal Navy established a blockade in 1951 to prevent Iranian oil from leaving the Persian Gulf through the strait. The tanker war during the 1980s saw a sustained attack on shipping, with Iran laying naval mines and harassing neutral tankers. A series of mine attacks on tankers in May and June 2019 was blamed on Iran by the US Navy. That same year, Houthi-claimed drone and missile attacks targeted Saudi facilities. In 2023, the Houthis launched a sustained campaign against commercial shipping in the Red Sea and the Gulf of Aden.
I think of the 2019 Upkick attack, the Houthi escalations. These were serious disruptions, but they didn't reach the threshold that would justify the scale of investment that alternative infrastructure requires. This deterrent architecture surrounding Hormuz made full closure seem too costly for any actor to contemplate seriously.
In the short term, don't expect anything too dramatic. The most likely scenario is producers will expand existing supply lines and make sure they include a plan B or a plan C as backup.
The starting point has to be a clear-eyed acknowledgement of what the goal actually is. It's not to replace Hormuz altogether. The volumes are simply too large, the geography is too complex, and the producer base is too dispersed for any single alternative to substitute for it fully. The goal is rather to build enough redundancy that no single choke point can produce a total loss. That means a network of corridors rather than a single pipeline.
Let's walk through what's already on the map. There are three main routes that are being used to transport oil from the Gulf countries. Since early April, Saudi Arabia has substantially increased flows through its east-west pipeline. They're claiming exports of 7 million barrels a day. The International Energy Agency oil report says that Red Sea exports almost doubled month on month. The UAE's Abu Dhabi crude oil pipeline also bypasses the Strait of Hormuz. It stretches around 400 kilometres from onshore oil facilities at Habshan to Fujairah. The pipeline is estimated to handle between 1.5 million and 1.8 million of barrels a day. And the Kirkuk-Ceyhan pipeline, which runs from Iraq to Turkey, can transport 300,000 barrels of oil every day. Since the war broke out in February 2026, Middle East oil exports have dropped by at least 60%.
New pipelines take years to build and cost an enormous amount of money. And if you believe, as we do, that fossil fuel demand is going to stabilize over the next decade or so, it is a difficult investment case to make. Now, we think expanding capacity on existing pipelines is a much easier sell than building new ones in a lot of cases. You could also see some structural change on storage capacity as a cheaper alternative to keep oil production going if new disruptions arise. So if the lesson of this crisis is we need to build more resilience, which I'm sure it is, now expanding existing pipeline capacity, finding alternative routes, like for example, the Green Corridor between Dubai and Oman, and investing in storage is where I think money could flow. Now, permanent rerouting through entirely new pipelines, the cost-benefit analysis there is probably harder to justify.
Over the longer term, say 10 to 20 years, the focus shifts to a more resilient network, a network of corridors for oil to pass through. Something bigger, multiple routes, multiple exits across different sea basins, all connected by stable cross-border frameworks, a web of corridors for energy security. This is harder to build and harder to fund, but it's the only model that delivers genuine resilience and not just temporary fixes.
The problem with these pipelines, of which we will see many more in the future, is that they are not safe either, because A, they go over land and are easily attacked, and the East-West pipeline, which we currently use in Saudi Arabia, is in range of Houthi missiles. And B, this pipeline goes to the Red Sea, which in itself has another bottleneck at the end of it. So in sum, there is no 100% safety. But the only safety which we have in this region would be by increasing the diversity of export routes, and I'm certain that this will happen.
The former British Prime Minister Winston Churchill famously held that the key to energy security was diversity in sources of supply. Safety and certainty and oil lie in variety and variety alone, he told the UK Parliament in 1913. Not much has changed. Fossil fuels offer easy transport and storage, but there are risks of supply distribution, as we are seeing right now in Hormuz. Renewable energy, while clean, is hard to store and move. If we can't transport it or store it, the lights go out when the sun isn't shining or the wind isn't blowing.
On a bigger scale, it's time that we step back and draw the lessons from these wars, from these disruptions to global energy, and say the result should not be more economic warfare and block them. The result needs to be a sound mix using all of the above and not relying only on one.
China is the world's largest importer by the Strait of Hormuz, historically relying on it for nearly half of its crude. The Iran crisis has accelerated a strategic pivot that was already underway. Beijing's long-standing energy security fears have been transformed into an immediate operational reality.
China moving to increase the share of oil transported through overland pipelines by 45% by 2030 is alone an indicator of that, right? Expanding corridors in multiple strategic directions. And again, I think of the geoeconomic implications of this model and what that looks like for the broader Middle East. The strategic and commercial oil stockpiles estimated between, I think, 1.2 to 1.4 billion barrels is over 100 days of net import cover for China. Just again, reinforces the case for this alternative routes and network diversification.
Europe is facing a crisis regarding LNG supply. Every European energy crisis since 2021 has produced the same prescription: more renewables, more nuclear, reduced fossil fuel dependency. European countries are often criticised for not implementing structural reforms. Is this a fair assessment?
I would actually push back a little bit on that premise, because Europe has done more than it's been given credit for. Gas demand is down around 20% since 2022. And actually 2025 was the first year renewables generated more energy than fossil fuels in the EU. So I think that reduced gas dependency is part of the reason electricity prices haven't spiked nearly as sharply this time around. You can see it in the numbers. TTF gas is up around 33% on pre-conflict levels, while in 2022, it was around 400%. Oil is a bit of a harder story because it remains the dominant fuel for transport, and very few European countries can insulate themselves from a serious oil shock. The electrification of transport is underway, and the dependency should fall over time.
Future energy supply involves diversification, both for producers and consumers. This can include geographical diversification, looking to other oil-producing areas like the North Sea, the US and Africa. Also better energy mix with oil, gas, nuclear and renewables. And then broadening the infrastructure, adding a variety of pipelines, LNG terminals and electricity interconnections. Diversification does mean higher short-term costs, the need for investment in infrastructure and dealing with possible inefficiencies compared to relying on the cheapest source. But these are weighed against the benefit of being better prepared to resist shocks.
So the lesson isn't just diversify away from Russia, which we thought it was after 2022, but it's that depending heavily on any single supply route carries a big risk. So all these alternatives through Central Asia, Eurasia, this is probably the reform conversation that will likely happen to diversify from a single transport route that gets these kind of problems.
If the Strait of Hormuz does not reopen soon, then the world will almost certainly face a major oil supply crisis, forcing painful, sustained reductions in demand. What's the damage if Hormuz remains shut for a longer period?
A prolonged closure wouldn't just be a price spike that disappears quickly, but it would mean stickier inflation, weaker investment, and central banks having to hold rates or even increase them for longer than what they'd like, right? Or even increase them. And that's the channel through which we think this conflict becomes a global economic problem more than a regional and contained problem.
Ultimately, a redesign to avert another crisis in the Strait of Hormuz doesn't seem like an option. The Gulf's post-conflict energy system would likely look much like it does today, simply because there are no viable alternatives to the strait or existing pipelines in the short to medium term. Instead, the focus will shift towards strengthening current infrastructure and diversifying supply routes for both producers and consumers. The real question is whether that will be enough to prevent the next global economic shock.